Hello traders, this is Day Trader Matt with businesswithtrading.com doing an E-mini trading room recap for July 8th, Tuesday. I forgot what date it was apparently. But today was a very good day. The markets did gap down a little bit and kind of stair-stepped its way lower the entire morning and then went sideways into lunchtime. Today we were 3-0 and pulled 4 points out of the markets. Our first trade was right here. We got short and we ended up taking profit down here at the lows. As the market did start to sell down, we did get short down here. We were able to take profit on that at the lows. And then we kind of watched things a little bit as they move sideways. We got short again over here, and we took profits on the lows here. Market did come back up a little bit, and then it sold off. And after that, it did come back up again and started moving sideways. So, not a bad day all in all. We did come 4 points ahead. You know, yesterday we gave back half a point, so we're still having a good month, and that's what it's all about. You know, is taking your consistent, profits. When you do lose, you want to lose small. You want to keep your risk tight. Yesterday we were only down half a point. Today we were up 4. You know, and it's all about that consistency. Like I always talk about, you want to be able to make a few points here, a few points there, and then when you add them together, it should turn into something. And that's how we make money, basically. That's what it's all about, is trying to be as consistent as possible. And some people ask me, how do you know when you're getting that consistency? How do you know that you're progressing? Because as traders, all we can really do is look at what we've done in the past. This is what I've done. This is my risk-reward ratios for the past few months, past few years. You can look at your, quantitative data. You can look at all of that. But whenever trading starts to become a little bit boring, that's when you know you've progressed over that hump. You're starting to move into the professional trading ranks. Whenever trading does start to become a little boring, you turn on the trading screen and you're looking at trades very objectively. You take your trades, you get out, and it just becomes kind of, I guess for lack of a better word, it becomes kind of mechanical in a way. You just do your thing, and then when you're done, you go do something else. You go have fun, do whatever it is you do that gives you fun. But that's when you know that you're getting over that hump. You're not an amateur anymore. You're getting closer to becoming a professional trader, is when it does start to become boring. And that's really what everybody should strive for, is trading to be boring. Because basically that's what it is. And anything you do in life is going to be boring at times. It doesn't matter what you do for a living. It's going to be boring at times. It doesn't matter how much you enjoy it. And being boring does not mean that you hate it. Those two are not correlative. I guess you could get semantic and talk about that a little bit more, but for this discussion, it's not. Being boring just means it's a little bit monotonous. Meaning, whenever you trade, you can be a little bit distracted because you're not going to. Because it is mechanical. It's a process that you don't have to pay. You don't have. I'm trying to word this correctly. I don't want to say what I was thinking in my head, because usually when I trade, I'll have I have my internet browser up, so maybe I go on Facebook for a little bit. I wouldn't recommend that to a new trader. I've been trading for a very long time, and it is boring to me. So I can do other things, wait for my setup. Once my setup gets there, I'm 100% focused on the screen, on what's happening. But if there's no setup, I don't have to be 100% focused on the screen. That's what I'm trying to say. And I'm glad I finally got that out. But that's really important, is you don't have to be 100% focused on your trading screen if there's no setup. If there's no setup, you can do a couple different things. You can paper trade, which I wouldn't recommend mixing paper and real money. I would say if you're going to paper trade, paper trade. If you're going to real money trade, real money trade. That's one thing I would say. But the best thing I found is just to watch stuff. If there's no setup, you can pull up another chart and start looking at this. Price did this 10 minutes ago or 20 minutes ago, or this looked like a setup, but it wasn't. It fell apart. Why did it do that? You can look at stuff like that. But when a setup comes, my attention is 100% on that setup, and I look at it, I trade it, make it happen. Because you see, we took 3 trades today, and 9:30 the market opened, and 12 o'clock is when the trading room is over. So during that period, we took 3 trades. So I'm not looking to take a trade I'm not looking to be in the market the entire time. I'm not looking to make 20 trades in that morning period that we trade. I'm looking for a few setups. I take them, and the rest of the time I'm sitting on my hands, watching the market, waiting for a setup. When one happens, I take it, and that's what it is. So anyway, hopefully it made a little bit of sense what I talked about today. You can always leave comments below. I encourage all comments. No such thing as a dumb question. Thanks for watching. Have a great night, and I'll see you back here in the markets. Thank you.